Welcome to the episode 2 of Market Update. I am DJN Defi, and here's an update on what's happening with the market since the last episode. Currently, the market's bouncing. That's good to see. The equities market is back up 2.48% on the Nasdaq and the futures, and crypto market seems to be bouncing as well. Yesterday, we actually tested the $30,000 support for Bitcoin, and it was quite a bounce. So we actually hit 30,000 and then it just bounced back up. So as I mentioned, 30,000 is going to be a strong support for this coin, and we definitely don't want to stay below it for much longer. As you can see from the long-term 1-year charts, last time we hit 30,000, it was around July last year. We actually briefly dipped below it at 29,000. So 30,000 is going to be the level to watch, and so far it seems to be holding on. But will we go back and test it again? Probably will. The crypto market is following the equities market right now, and it's not like gold where it's inverse relationship. It's actually following the market. So Ethereum is also going up as well. It's up at 2400. It was down to 2200 at the lowest yesterday. So overall, the market seems to be coming back, and we're back at 1.55 trillion market cap, and seems to be good. Now, if you look at all the top tokens, the top loser right now is the Luna token, in which my last video I have mentioned about the DEPEGing events. So currently, if you look at the charts, after I did my video yesterday, it was at like 93, 94 cents. But after my video, the whole thing crashed. It actually crashed really hard. Luna token, UST, supposed to be worth $1. It actually DEPEGed so hard that it went as low as 60 cents. So this is a token where it's supposed to worth $1. But now, due to a lot of massive sell-off or a bank run, it went as low as 60 cents to $1. Now you might be saying, hey, why don't we just buy it up at 60 cents because this is supposed to be worth $1, right? Well, not a lot of people do that at that time because of the fear, because they're scared that if they put more money in it, if this whole project collapses, they'll lose all of their money instead of making money on the events that it returns to the peg. So you definitely need to look into the risk and reward ratio. So if you are somewhere here, let's say 90 cents, your reward is 10 cents, which is 10%, but your risk is 90%. So you're risking losing 90% in order to make 10 cents. That's not a good risk reward ratio. However, if you want to go to, when this coin goes to 60 cents, now if you think about it, if it goes to 60 cents, your downside is about 60%, right? You could lose all of it. You could lose 60 cents. It could go down 60 cents and you lose all of it. Or it could go back up to $1, which is 40% from there. So your chance of making money and losing money, reward ratio, it's much, much better when it's lower. So that's why people buy the dip. And that seems to be what's happening down here, is that a lot of people and arbitrage bots and a lot of people with a lot of money on the side decide to go back in at around 60 cents. So that's why they are trading back up, and it seems to be going back up. Right now, it's holding on to 90 cents there. It's still DEPEG, but not as bad as 60 cents. 60 cents is really bad. You're losing 40 cents on every dollar you put in Terra. So again, the main issue is that if you have a stable coin that's trading like an equity, that's not a good sign for the stablecoin. It's no longer stable because you're speculating on the price of this asset right now. So that comes back to the main topic of this video, which is, well, somebody made almost $1 million from this. Like I said, it's very risky to buy the dip of this in order hoping for it to go back up. But if you have a lot of capital and you want to deploy it and you are willing to take the risk of that, you can certainly do it. And that is why our favorite CFO, Sifu, did it. So basically, there's on Etherscan, you see that Sifu himself, he exchanged $2.8 million in USDT, which is Tether, for 3.88 million Terra. So remember, when this is DEPEGed, you don't have to pay a lot of money to get the Terra. You're getting 60 cents on the dollar for every Terra. So he's paying $2.8 million in Tether to get 3.88 million in US Terra at that time. So at that time, the price of Terra was 72 cents. So it's currently trading at 92. So this means if if UST goes back up to $1, Sifu could make 30 cents on the dollar for that. So that's about 30%, in which is about $1 million. So if Terra does go back to $1, Sifu will make $1 million in one day. So this is why, like, people who have power, who have money, who's in the know of this whole thing, they decided to take that risk of buying it up when it was around somewhere here. I bet that's probably Sifu and his party, his friends or something. They all decided to buy a lot of Terra token in order to bring the price back up to its peg. And that is what happening. And so currently trading at 93 cents. So if it goes back up to, I mean, he could take profit right now and sell the Terra back for the profit. Now, what is going to happen to this? Well, a lot of people seem to be thinking that when the price does go back up near its peg, maybe $1, or near $1, a lot of people will start to unload their Terra because the confidence in the project seems to be shaken. However, the other side of the coin is that a lot of people will say, hey, you know what? Terra has gone through this crazy DEPEG event. It actually went down to 60 cents, but it's recovered nicely because it's designed to behave this way, because a lot of people will take that opportunity to arbitrage this coin in order to bring it back up to its peg. And that's what it was supposed to do. That's how it was designed. So a lot of people will say, hey, this is a good test and we actually passed it, and this will actually make this project even stronger. So that is definitely something to watch out for. You definitely want to keep an eye out on what's going to happen and how this will turn out. At the moment, the Luna token is still trading quite a bit down. So if you look at Luna token, it's still down 42% in an hour, in a 24 hours time span. So Luna is currently down, it's trading at $33, which is pretty bad, but we will see if it will recover. And remember, these are sister tokens. They are totally related to each other, so we'll see. And here's the actual Pexio alert that Sifu actually swapped at. So he actually replied that funds are with Sifu. So he's actually he confirmed that he did it, and it's a very good trade in my opinion. That's why he was the treasury manager of Wonderland. And no, I'm not simping for the guy. I'm just talking about the trades that's happening. He seems to be paying attention to these events and thinking about what to do and what type of actions to take in order to profit from the events. And I think that's what all of us should do if you want to play this game. It's a very dangerous game. There's definitely risk involved. But if you are smart and figure out how to take advantage of the situation, you can definitely make a lot of money out of it. So that brings me to the founder of Avalanche, which is Emin. So he's going to talk about this whole event and what he's thinking about stablecoins, algo-pegged stablecoins. So here's a thread from him. So what is he saying? He's saying, I always said that algo stables are subject to destabilized bank runs. He's always said that. The only mechanism that can defend against this is a strong active team that performs open market operations. Well, he's saying that even though this is a decentralized world, we still need a team behind an algo stablecoin in order to defend it, like yesterday. So that's what the Luna Foundation was. So here's his thoughts. We need a decentralized stablecoin. Fiat-backed stables are subject to legal seizures and capture. A decentralized economy needs a decentralized stablecoin whose backing store cannot be frozen or confiscated. Fine, that's one of the reasons people do a algo stablecoin, so it's not backed by any traditional fiat currency. So there isn't room in the market for a dozen or half a dozen, or even just 2 algo stablecoins. This is a market where the biggest one wins and all the others lose. Which I agree. You cannot have multiple algo stablecoins, because if you have multiple, then instead of people buying it up via the arbitrage on this coin, they will just take all the money out and put it in the other algo coin, and this one will be left to die. So in reality, probably the only one and the biggest one will survive and win. If there'll be decentralized stablecoin that succeeds, it'll be the one with the largest value and the most battle-tested team. So let that sink in. It's not a game where Johnny came late has a chance. So basically, you need a history of battle-tested events like this one on Terra in order for people to believe in it, to have faith in this token. So the next time, if it ever depegs, you know that it will most likely come back and even have a stronger faith in the coin. And a lot of people will not be as hesitant as last time, and they will buy in and try to arbitrage this in order to bring the price back up to the dollar. Hope all you can see why you should not touch copycat algo stables issued by purely technical team. If the team claim to be feigned that they were once interns at Google, they are not going to make it. The team that has the best open market operation is the only one that can pull it off. For various regulatory reasons, there's no way a US-based team can succeed at an algo stable. So that's true. There's US law is very strict on these things. It's pretty much only a Korean, Singaporean, or Swiss team has the right regulatory environments. All the others are ticking time bombs. So that's true. You don't want traditional people to step in there, and so you don't want them to have the regulatory involved in this, because they will take away the token, then they become centralized. They can just shut down the project, right? For the algorithmic side of stablecoin to work, the underlying chain has to offer high capacity and resilience under load. Few chains have the right mempool, fees, and API inference to handle high loads. So he's plugging his Avalanche chain. The space is incredibly resilient. We just weather a substantial bank run. Had this happened in TradFi, there would be talk of doom and bailout galore. One thing we should know for sure is that banker bonus will still be paid. And that is what happened with the 2008 financial crisis. When there's a bank run, the banks will get bailed out. So that's no difference from let's say the Luna Foundation, which is a centralized entity who will help peg the token. I'm not at least a bit surprised by UST resilience. Remember that every single stablecoin has at times DEPEG, including fully collateralized fiat-backed currencies. All of them have the real team behind them have bounced back. The bouncing back is great arbitrage opportunity. The dynamics that give rise to the bank run exactly reverse on the way back. So he's talking about that opportunity what I was talking about, where you can buy a dollar at 60 cents. So you make 40% right away, basically. More complex stablecoin design seems unlikely to be more stable under the bank run. The simpler the mechanism, the easier it is to understand and implement. I can imagine not many more complex designs. I can't imagine that any of them would achieve better stability. So he's talking about the design of Terra. It's actually quite nice after I read about it. Every single sovereign currency has its own difficulty maintaining advertised pegs. There isn't much difference between sovereign fiat currency and algo stablecoin in terms of challenge faced with defending a peg. So all coins need to have the people or some sort of action to defend their pegging. Before anyone says, hey, open market operation by team doesn't seem centralized. Well, I said that too. Remember that the value proposition here is to create an asset whose backing store is decentralized and can't be confiscated or frozen. A capable team is absolutely essential for this. That is the unfortunate truth of DeFi or blockchain or whatever in general, because like here, I'm talking about the CEO of AVAX, right? You have a team behind AVAX. So nothing is truly decentralized, in my opinion. We all love drama, and it's possible to trade in the drama to eke out small percentage gains, while taking on some risks due to hard to anticipate, like centralized exchanges, halting trades, or deposits and whatnot. The real fortune in crypto lies more straightforward in long trades. Overall, the UST depegging played out exactly as we saw in past historical cases. I'm even more bearish on all copycats and more bullish on UST once the dust settles down. So he's definitely bullish on UST, and this seems to be good for the coin, in my opinion, after a bit of research. I think this Terra will probably get out of this and it will go back to its dollar peg. It's very close right now, and it probably will give more confidence to the people in the future. And I think this coin will win out in the end. So that is my opinion. Let me know what you guys think. Did you guys arbitrage? Did you guys think this was the end of the world, or what do you guys think about this coin? Do you think Terra will survive in the future, and will you be investing in US Terra? Let me know in the comments below. And that is it for this episode. I hope to see you guys in the next one.